if you look at the housing market here, I think you can get mortgages now at 1%, 1.5%. And it's, people are looking at it and almost thinking, well, it's almost free money. So I might as well borrow as much as I can. And it's actually pushing up house prices. So this year, the UK will have run, by the end of the year, the biggest budget deficit since World War II. But house prices have gone up. People have lost their jobs, but house prices have gone up. Asset classes, shares, stock exchange, stock market have gone up because people don't want to hold it in cash because they're getting almost no interest on it. If you take a government bond, you're effectively, with inflation, you're getting a negative return, a negative yield. And so you might as well invest it in the stock market, invest it in property is what people's, I think, assumption is, which pushes up all those asset classes at a time when actually the economy is doing even worse.
Welcome back to Liberty and Finance. We're delighted to have a first-time visitor today. This is Frederick Bell. He's the CEO and director of Elemental Royalties. Frederick joins us this Friday, November 27, 2020. Frederick, thank you for joining us on the show.
Thank you very much for having me on again.
When we found out about the formation of your new company, we wanted to have you on. We'll get to that in a little bit, but first, people can't help but notice that you are, as a CEO and director of a company, one of the youngest ones out there. I saw in your write-up that you got the Young Rising Star Award at Mines and Money 2018, and you're on the committee of Young Mining Professionals in London. We're just grateful for your presence here with us and wanted to talk with you about the fact that we're even meeting this way via video chat is something that has become, unfortunately, familiar to many people this year because of the restrictions that we've all been faced with in terms of how we can get together with people or the methods that we have to go to, the extents that we have to go to get together, but it does facilitate our being able to meet each other this way for the first time. So welcome. You'll find that we've got many tens of thousands of devoted and highly engaged viewers on our channel, Liberty and Finance. They're passionately interested in freedom. They're interested in self-reliance and self-sufficiency, awareness and preparedness. And they're also interested in real money, sound money, gold and silver, that sort of thing, because it helps them to be prepared for uncertainty and reduce risk, that sort of thing. So speaking of risk, could you talk to us about some of the things that are first of mind for you in the research you've done and the people that you've heard and talked with recently about major trends that are going on in our economic and financial lives right now at this very unusual year? And then maybe we'll get a chance for you to lead on how, even during this storm, so to speak, you were able to launch a brand new company.
Absolutely, Donegan. I think I'm calling in today from the UK, and it's probably a very similar situation, economic situation, to the US and Canada, North America. I think the government here has, combined with lockdowns, gone on the biggest borrowing spree since World War II, more so than the financial crisis. And I think that if you look back and use the UK as an example, since 2000, we have borrowed money in 18 of the 20 years to date, and borrowed money at a much greater rate than we have ever actually had a surplus. And so I think that is that is something that you have to keep front of mind, because it can creep up on you. And all of a sudden, what was a sustainable debt position 10, 15 years ago is suddenly not sustainable. And by the time people start talking about it and it becomes front of the news cycle and it is a topic of conversation, it's sort of too late by then. And I think you saw that in the financial crisis previously. Greece, countries like Greece and Italy and Spain, the debt problems they had were building up for years, but it was never front of the page, front of news. And I think that now the UK is going over 100% debt to GDP. And I think that a lot of other Western countries are, and it's just not a sustainable position to be in. And so, look, I think my generation, and mid-30s now, my generation aren't I don't think, nearly as aware of this. as sort of previous generations that have maybe been through in Germany inflation historically, their grandparents, or other countries that have seen this. And I think that unfortunately it is a trend that governments and seem to be willing to keep borrowing money in a way that just isn't sustainable. So I think that is at some point that will become a defining moment in how countries deal with those debts.
It's interesting because at the same time that you mentioned, when debt load becomes unsustainable or unmanageable, when you can't service your debt, that's the old saying, how did I get ruined financially? Well, little by little, and then suddenly and all at once. The idea being that right now they're managing to extend that and prolong that through artificially low and historically unprecedented low and sometimes negative interest rates. That's got all kinds of effects we've talked about that affect ordinary people. It also affects business. Can you talk to us a little bit about how it reduces the cost of borrowing or how it reduces the cost of capital for being able to, in fact, start a business at this time, even though in many ways the economic environment is horrible for many types of business? How does the low interest rate affect, on the good or the bad, your plans?
Yeah, I think it has a really significant impact at the top end of the business cycle, because major companies have borrowing costs, particularly in the royalty space. Major companies can have borrowing costs of 1%, and that's it changes the economics of investments they can make, and it also changes, of course, I think individuals and investors, returns on bonds, on investments when they're getting money that they're keeping in the bank. And so, from our position, and just from Elemental company side, we are able to increasingly borrow greater amounts of money at a lower cost as we grow. But the ultimate boundaries of that have shrunk a lot. So whereas 5 years ago it would have been borrowing money even at the top at a much lower rate, we're now going even beyond that, and so I think that's had an impact. And if you look at the housing market as an example, and I'll use the UK again just as an example, but if you look at the housing market here, I think you can get mortgages now at 1%, 1.5%, and it's people are looking at it and almost thinking, well, it's almost free money. So I might as well borrow as much as I can. And it's actually pushing up house prices. So this year, the UK will have run, by the end of the year, the biggest budget deficit since World War II, but house prices have gone up. People have lost their jobs, but house prices have gone up. Asset classes, shares, stock exchange, stock market have gone up because people don't want to hold it in cash because they're getting almost no interest on it. If you take a government bond, you're effectively, with inflation, you're getting a negative return, a negative yield. And so you might as well invest it in the stock market, invest it in property, is what people's, I think, assumption is, which pushes up all those asset classes at a time when actually the economy is doing even worse. And so from our perspective, I think all of it leans towards gold, precious metals being a very good store of value against this, because there's prices that we're seeing here are just not sustainable on these trends in the medium to long term.
One of the reasons we met you is because you're in a royalty company, and we met with Rick Rule. He's been on the CEO of Sprott Asset Management. He's been on our show several times, and he talks to us about maintaining cash liquidity. He also talks to people about maintaining bullion liquidity. He says, now, if you have both of those taken care of, in other words, you've got to have emergency funds to help you be able to take advantage of the kinds of unusual situations that unusual times are going to provide. But once you have that in place, then he talked, if you're going to be looking at companies that are involved in the natural resource space, strongly guiding people to take a serious look at the strongest royalty companies. Some people aren't familiar with what royalty companies are. Can you talk to us just for a minute about what makes a royalty company different from, say, a mining company that's actually providing the original element out of the ground itself? What makes a royalty company?
Actually, Sprott have been very supportive of us to date since we listed the company. So I think that they really get the royalty model. They're so familiar across the mining space, and I think particularly the royalty model. And what ultimately makes a royalty company a success is that you are the last dollar you invest into buying a royalty is the last dollar you'll ever sort of need to invest into that asset. And you have free optionality on any future discoveries for the rest of its life. And so I often sometimes use the analogy of a music record, that when it's produced, the singer, the artist, the producers, they all might have a royalty on it, which is every time that song is played, they get 10 cents, and they get that forever, for the next 20 years, 50 years, 100 years. And a royalty in the mining space is very similar. Every time that mine produces gold, we will get a percentage of the revenue from that mine, and not the revenue after costs and profit, but the gross revenue. So we are directly linked to gold price in that example. And so if we end up with one royalty when we started, and we're now on 6 royalties, and we will now, from this acquisition we've just made, we'll be going up to 9 royalties. All of those assets, for as long as they are producing, and as long as they are continuing to discover more gold in the ground, we will get revenue from those on a royalty. And that's what makes the model so powerful, because you have very low overheads, you're not operating any assets, and you're really diversified. So it's great low risk exposure to precious metals and commodity and the gold.
People are concerned for the prospect, and we talked about this low interest rate environment and how it's spurring some additional capital investment in various ways. People have talked about the potential risks on the flip side of that, is that if we do get a rising interest rate environment, that you mentioned sovereign debt of many nations will become extremely difficult burdens to bear, as well as on people's individual households. But another effect that can happen with that is this rising operating costs for businesses that, like, such as mining companies that have to purchase, if energy costs go up and fuel goes up and different things for them, their operating costs can go up. But from what you just said, it sounds like the royalty company that owns a first cut of their gross is not going to be as subject to impact from those increased operating costs.
Yeah, that's completely right. And that's actually exactly what we saw in the last mining cycle boom, which was the commodity prices rose, but all the operating costs for the companies that were mining it went up, because geologists, engineers, everything was in short supply. And so actually, as much as commodity prices rose, all their operating costs rose. And the benefit with the royalty company is that our operating costs are fixed. We have a few people in an office, and the big royalty companies, half the team is the accountants managing the different payments and checks that are coming in. And so you can scale up the model really quickly, and you can get an awful lot of leverage from it. Because if we buy a new royalty, our costs aren't really increasing. And so all of that revenue is sort of going to free cash flow. And so that makes a real difference. And so that's why royalty companies can be a very powerful, lower risk way to play the precious metal space, or to get exposure to gold.
One thing that occurs to me, though, is if your slice of the pie, so to speak, comes off of the top line revenue of these producers, you still are very keenly interested in their success, in the success of them increasing that how much gold they're discovering, how much gold they're producing, that sort of thing. That leads us to a question I wanted to ask you. I guess I will frame this as the power of discovery, meaning gold discovery. Can you tell us how exploration success and discovery can affect the valuation of royalty companies such as Elemental?
It's one of the key points you're highlighting, and it is in the medium to long term. It is how royalty companies have been so successful and outperformed gold as a commodity, outperformed gold mining index of companies. And it is because royalty companies get optionality on all future discovery from mining companies over that land. And so if you think, for example, your first mine, when they build it, they define a 10-year mine life. And typically what you will see is a lot of these mines 10 years later still have a 10-year mine life, because they have continued to explore, continue to develop as they go. So for the royalty holder, you buy that royalty in year 1. In year 10, you've been fully repaid for that royalty, but then the mine has still got the same mine life it did when you started. And if you have not one of those, but 2, 3, 4, 5, 10 different royalties, all doing that all simultaneously, you can see how very quickly you actually end up getting a much better return than in the operator would do, or just to gold as a commodity. And so that power of discovery for a royalty company is one of the key factors that makes it such a successful model.
Another thing that Rick Rule has talked to us about on several occasions is about betting on winners. Is that when you find people who are lucky, they tend to be serially lucky because they've got methods and they've got instincts and they've got connections and they know how to basically increase the odds of becoming successful by the way that they do what they do. So I guess I'd like to talk about this as the power of people, and what role have some of the different team members or skill sets played in Elemental's formation, because you're a very new company and your planning and your growth.
It's something I learned early on, actually, that good people tend to introduce you to other good people. And so the quality of the networks and the people you're involved with can make a huge outsized difference. And it's often an intangible, in the sense that you can't always value it in the same way that you can an ounce of gold sitting on your table, but it is absolutely critical. And for Elemental, we've been private for 3 years and then just listed in this summer of 2020. And the 2 partners we had privately alongside me were both 20 and 30 years at Western Mining, which was one of the biggest Australian mining companies that was taken over by BHP. And I think that the benefit there is that we get all the value of their years of technical expertise and working on different projects and assets, and we really can't replace that. I think we can bring the drive and the passion and work really hard, but what we really need at the end of the day is people like that. And we recently, with the listing, became part of Discovery Group in Canada, which is a well-known group of companies, and John Robbins and Jim Patterson became involved through that. And again, we sort of doubled up on the networks, on the experience, on the connection. And so what we like to say is that we've got a really core team here of sort of 4 people now, an average age of just under 35, but we have got the really, if I can call it, the grey-haired technical years of experience around us to make sure that we are doing the due diligence necessary, we're looking at the best assets, and we're finding out what isn't said in the technical report. And I think that if you can get that really good blend of ambition, of drive and energy, and you can get some really good people around you who have been through the industry, who have been serially successful, and who have those reputations and those contacts, then I think we can get the best of both.
Can you give us a few specifics about that? I mean, we've heard for years this principle that you're describing there is a sound principle with people who have truly achieved great wealth or great business success. And that's, first off, they say OPM, other people's money. If you're going to grow something, don't necessarily do it all with your own money, but leverage the money of others to achieve something greater. And they said even greater than that is OPE, other people's experience. So that idea of bringing in people who already have the experience and just being able to springboard very quickly off that. Can you give us some specific examples of where that's played out in the formation or the planning or the growth of Elemental Royalties?
Yeah, I think a really important principle for us from the outset has been that we have a very high ownership percentage in the company. And so when we listed, following the fundraise and listing this summer, I think the management and board of directors had about 24% of the company. So just under a quarter. And that's really important, because it means that we're not just looking for growth for the sake of growth. We are ultimately, our success is going to be adding value to the shares and building the company the right way. And I think that's really key. And having a company that has got to the stage we are now, where we still have a material insider management board ownership, is it makes a huge difference when we're looking at different acquisitions, and we're sitting in the same shoes as all the other shareholders in terms of our analysis of it. And I think also something there is that whether it's through some of our seed shareholders in the mining industry or through joining Discovery Group on listing, I think that with that has come a greater sort of network and a greater number of people in the industry who are keen to lend their experience and lend their support. And when we did a acquisition just recently, and actually it was some of those connections that enabled us to do the DD on the assets, enabled us to get familiar with them. And I don't think that we would have been able to do that had we not had those people actually personally invested in the company and, you know, benefiting from the company's success. So that's been really key. And I think that all our experience since we listed of being part of Discovery Group's been fantastic. I'm calling in from London today, and you know, being listed in Canada, I think they have opened a lot of doors for us there. Very good track record, and been really helpful in terms of all of their capital markets experience and network.
I did want to transition on to talking about Discovery Group, because that's how I met you also, was through Jim Patterson of Discovery Group, and he's been on our show, and we talked with him right after Sprott Symposium, and he said that there's what he calls the power of Discovery Group, which is exactly what you're talking about, this synergy where the whole is actually greater than the sum of the parts. And if we could talk to us about how being part of Discovery Group helps Elemental. I know you've talked about that. You said some exposure to the Canadian and also some specific experience, but can you give us more of an understanding of why it makes a difference to a company like yours, a young and growing company, to be part of a group like Discovery Group?
Well, I think the credibility and I think people's reputations really matter in business. And there's a saying that you only have one reputation. And, you know, if you lose it, then that's sort of game over. And I think that the key thing in Discovery Group is that every one of those companies and all the individuals I've interacted there have a very good reputation and a very good sort of moral compass, which means that we're all, I think everyone I've seen is genuinely working to the same end to make that company as successful as possible. And it sounds so simple when you say it like that. But it does have an impact when we talk to people in Canada who are in the mining scene, and they know the other companies, they know the individuals, and you've almost got that immediately that credibility and that goodwill from being part of the same wider group, because they know that you will share those characteristics.
It reminds me when you were talking earlier about internal ownership, there's that internal, natural organic alignment, that alignment of purpose. And people talk about if you have a big enough why, you can always find a how. So you already have that internal alignment between management and stakeholders and shareholders. But here you're talking about like an external alignment where you've got this supportive guidance and supportive networking and reputation and so on. That's what just hit me, was that internal and external alignment.
I think that's absolutely, you've hit the nail, I think, on the head. And I think that everyone's only got so much time in their day to sort of look at companies or to hear about stories. And I think if they can get comfort quickly that you're part of a group that has a really successful track record with a lot of very good people in it, then I think that immediately gets you over that first hurdle of, you know, do I trust these people? Do I trust this company? And that for me is always one of the most important points when you're starting out.
One of the things I wanted to make sure we make a habit of doing on our interviews is to educate, because this is one of the reasons, okay, I talked about way back in the beginning when we started our channel, it's about awareness and preparedness, help people be more aware. Part of awareness is learning and education, being able to even speak the language. And for me, being able to participate with the many guests that I've been privileged to be able to have on has been a huge learning experience for me. People only recently, after I've been doing this about 9 years, are starting to ask me questions, because usually I'm always get to be the guy asking the question. I love that, because on behalf of all of our audience, I get to be here on behalf of them and putting forward questions that they may be wondering or that they have actually submitted for the guest. So I get to learn along the way. So I'm going to ask if you'd let us hit you with some rapid fire terms, and you see if you can just give us the nugget, gold nugget of understanding of awareness of what that term means, why it's important, and why people who want to understand more about either the gold mining industry or whatever should be aware of what that term means. Why should they care?
Looking forward to it.
Ready? Here we go. Gross metal value. What is gross metal value? Why is it important?
Well, it's the actual it's the value you get from a specific from a metal. So if you're talking about an ounce of gold, or you're talking about an ounce of silver, I think understanding what that actually equates to when you're looking at a deposit, because you know 1,000,000 ounces of silver in the ground has a very different value to 1,000,000 ounces of gold, and I think that knowing that across the different commodities and different mines helps you understand ultimately which of those are going to be successful deposits and which won't.
All right. How about gold equivalent ounces, GEO?
So a gold equivalent ounce is typically when you have two or more commodities. So it might commonly be silver and gold, but you express it in equivalent ounces of gold, so you can have a more direct read across to different companies.
So when you want to compare, let me just translate that in my mind. If you're comparing apples to oranges across different mines, this one's got Mother Nature puts a whole bunch of different minerals together here, and she puts a different combination of minerals together. And if you're going to mine these and mine these, you go, which one is a better investment? How are you going to compare it if it's so complex? So that's a way of simplifying the comparison.
Yes. So you express both in apples, okay, so that everyone can see how many apples it's producing.
Well, that's going to be tricky because as those metals move in their own individual markets, that's going to change all the time. Wow.
Okay. That can fluctuate, and you know, the ratio of gold to silver, as an example, can lead to different gold equivalent ounce production numbers, even if, for example, the gold numbers are the same throughout, but the silver price might change, and so that might increase or decrease in gold equivalent ounces. But it gives you a high level, simple way to read across.
Comparing mines, comparing projects, comparing companies. Got it. Investments. How about royalty versus streaming versus off-taking? You talked to us quite a bit about royalty, the royalty model. What's the difference between a royalty? Because sometimes people say these together, like a royalty and streaming companies. So what's the difference between royalty, streaming, and off-take?
So I think at a high level, a royalty is you have a fixed 1% or 2% of the revenue from an asset forever. A stream, by comparison, it's very similar in its principles, but it can have a lot more nuance behind it. And so you can have a stream where you pay 20% of the ongoing price. So you have to make payments going forwards. And you can have a stream that is 2% initially, but falls to 1% after 10 years. And so basically a stream is almost, it is a royalty made into a financial instrument that allows more flexibility, but the underlying principle and the underlying exposure is very similar. And then an offtake is typically slightly different, and that is where you have a commodity house which is committing to buy the end product from the mine. And so if you had a gold mine, you don't typically need an offtake because it is an open market. But if you had a more esoteric commodity, you might want to have an offtake agreement in place. You might even need one with a certain trading houses to ensure that you have a buyer for that commodity when you produce it.
I see. So it's a promise to buy in the future. You like a customer who's they're lining up. They're saying, "I'm going to be a good customer for a long time at this rate, at this amount."
Exactly, which is often what mines need when they're, the capital expenditure is going to take 3-4 years to pay back, and it will take another 3 years to pay back their investors, and it's a 20-year mine life. Sometimes they do need those long-term buyers to commit in advance
in order to get the financing approval from banks or for lenders to have confidence that de-risks the investment, because they've got a good customer lined up. Okay.
Yes.
Okay, last one. Diversification, specifically meaning a polymetallic ore body or risk spreading by a commodity or jurisdiction or project type. So can you talk to us about different strategies of diversification within this industry?
I think that diversification it's probably one of the most important parts. And for a royalty company in particular, diversification is our core, our lifeblood. And the reason is mining, no two ore bodies are typically exactly the same. Everyone is unique and everyone presents its own problems. And sometimes those are perfectly surmountable, minor, but sometimes they can be real challenges. And the best way to address that is to make sure you're diversified. And it's not as easy to do when you're an operating company. because you have to operate different management teams, different jurisdictions, possibly different countries, different languages. But as a royalty company, you can very easily diversify, and you can diversify that risk down by taking different royalties on different assets. And so a small company, a small royalty company, can be more diversified than a mid-tier miner in 3 years, by comparison. And so I think that diversifications is key, because it just avoids that sort of black swan event where one mine stops working, there's a civil rebellion or unrest or in one country, and all of a sudden, the company goes under. With a royalty company, if you've got 5 assets, if you've got 10 assets, you're already so diversified that you can weather even those, once every 50-year events that might happen.
So you're talking about diversification as a method of risk reduction is interesting to our audience also, and to me, because we've been talking about risk reduction for the whole life of this channel. We used to be called Reluctant Preppers before we became Liberty in Finance. And in that regards, ways of mitigating your exposure to all or nothing risks. And you said geographically, operating in different countries and different jurisdictions is one. And this idea of polymetallic ore bodies, can you hit that one again for us?
Yeah, so a polymetallic ore body might be a copper mine that has a byproduct of gold. And you've got to be careful sometimes with those, because you think you're getting gold from a gold mine, but actually the economics of that mine are driven by copper, which might be how well the economy is doing. And so in that scenario, if the economy goes down, that copper gold mine might stop producing, and you thought you had a safe bet on gold, but actually it is a byproduct, not the main commodity. And so sometimes you've got to be really careful that if you're doing a polymetallic investment, you don't have 10 gold royalties on 10 copper gold mines, because then if the copper price goes down, you could go down with it almost unwittingly. So that's where, again, diversification across pure gold mines, different jurisdictions, different operators, all of those factors, different countries, they're so important. And the sooner you can diversify your company's interests, the more prepared you are in events. And COVID was a great example, because in some countries, even really advanced countries with great infrastructure, sometimes they were the first to clamp down on the economy, to put restrictions on the economy. And some places in Chile, mines had to stop operating or go into severe reductions. And as an example, we had one royalty in Chile, and they had to reduce temporarily workforce production by about 25%. Now, if that had been our only asset, that would have had a material impact on us. But actually, because it was already one of 5 assets for us, it didn't really impact us at all. And actually, as it turns out, that mine is still on track for the same production it had. But if that had been our only asset, and we were a mining company, we might have been a lot more concerned than we are. And so I think that's a key benefit early on from something like COVID that you could never have predicted. I don't think 18 months ago would have the impact that everyone's seen it have.
That's certainly true. And we've known for a long time that there have been many latent systemic risks in our financial world and in many other energy and so on, geopolitical. But this was a bit of a blind side for many. And certainly the effects that it's had on us have been far reaching, and we don't know how far this will continue. But we're trying to demonstrate the adaptability of the human species, I think, at this point, by making sure that we find workarounds wherever we can. Wanted to touch base with you briefly, because you've mentioned the youthfulness of the company, Elemental Royalties, and also the rapid increase of number of mines and assets that are under royalty agreement. And I recently understand you just had a big announcement within the past week of a new one called South 32. Can you talk to us about why that's important for the company and why potential investors need to be aware of that?
In Elemental's history, we've been listed now 3 or 4 months, but we've been a private company for 3 years before that. And this is our first acquisition as a public company. And I think to do it with South 32, who are a major, principally Australian mining company, and they were spun out from BHP, one of the biggest mining companies in the world. And I think to take the gold portfolio that they have and put it into Elemental and they are now, with this transaction, becoming our largest shareholder. It doubles the size of the company effectively overnight. And I think it's a really big endorsement to have an $8 billion mining company becoming our largest shareholder within sort of 4 months of listing the company and going public. And I think the impact it has on us is it weights our portfolio more towards Australia, which is a tier 1 jurisdiction in terms of mining. It diversifies us, adding another 3 assets into a portfolio. And importantly, they are all 100% gold assets. And so that's, I think for us as well, commodity-wise, it's a really good fit. But it's the biggest transaction we've done. And it's, I think it's a really fantastic one for the company because it gives us growth in our revenue for the next year, for 2022 and into 2023. So it really does put the company in a completely different position going forwards. And I think a great endorsement to have South32 coming in as our largest shareholder too.
How does that affect existing shareholders or incoming shareholders when you do something like this acquisition? How does does it dilute the shares that they already held? Certainly, they have more assets now that they're partial owners of. How does that affect the investors?
So I think it's like South32 would be becoming just under 20% shareholder in this transaction. So there's some dilution there through the acquisition, but it is more than outweighed by the assets we're getting. And it puts us from 2020, in sort of 18 months time, we will have double the revenue that we have today. And we're looking out forwards on forecast revenue from those assets. It is going to lead to a more than doubling of our revenue going forwards beyond that. And so if we do nothing else today, we would still be in a significantly different position to where we are in 2 or 3 years' time. And I think that the real differentiator with Elemental is that we, for a young royalty company, we predominantly have producing gold assets. And you'll see that with some of the big royalty companies, but you very rarely see it in a company our size, to have really good quality, diversified portfolio of gold royalties from the outset. And so what it does is it gives that really low risk profile through the diversification. But at the same time, it's shown that we can effectively double the size of the company in one transaction within 4 months of listing. So you get all the lower risk diversification, and you also get that upside optionality. So it's a really good, I think, a good demonstration for us at the outset of our life as a new public company of what we were able to do. And I think it's you talked earlier about the debt problems being, they're building up over years, and all of a sudden they become a major issue overnight. And I think the other way around, this is not an overnight success. It's been building up quietly as a private company for 3 years. And I think now as a listed company, we're now sort of starting to show that. And I think that this transaction is a really good first step for us.
It sounds like it ticks off several boxes there in terms of the impacts that it has, and many of them positive in different ways. We have a question here that's related to this from a viewer. Black Oak Property Maintenance asks, what project are you most excited about right now and why? I'm not talking about your recent move with South32. I mean, what mining operation are you most excited about?
Generally. In the general mining world, okay, that's an interesting one. I think that it would be really interesting to see 1 or 2 of the recent success stories in exploration, to see how they progress. And there's another company that is that's part of the discovery group called Great Bear, and they have some projects in Canada, and they have been in the last 2 years. It's looking like one of the biggest discoveries in gold, and so that's one I think that is it will be really interesting to watch how they do over the next year or 2 as they start to define that, because for the future of the industry, you always want to see new discoveries coming on. You always want to see new mines being created. It's so positive for the economy. It's positive for the communities in which they're in. and it's positive for the industry. So that would be my one pick. I'm excited to see where it goes.
So I don't want to put you on the spot, like that's fair, but within Discovery Group, for example, one of the synergies I don't remember you mentioning, but it just occurred to me right now, is that you as a royalty company, if you see one of your compatriot companies in the group that's got a Discovery, then there's a potential, is there not, for some synergies there in terms of being able to help each other out?
Yeah, definitely. And it's not even the projects that the other Discovery Group companies have. Sometimes it's even introductions that they make. And when you are part of a group of 6 or 7 or 8 companies, and there's maybe 50 people involved in those companies, it's actually already been the case that someone from another company has said, I know somebody who has a royalty on an asset. Let's make the introduction. Or you should talk to these guys because we spoke to them recently and they have a royalty on a project. And so that whole network, it's a sort of virtuous circle. The more you do together, the more you are thinking of each other's projects as you go, and the more opportunities come out of that melting pot of ideas and experiences and backgrounds.
That makes perfect sense. It definitely, I've experienced that in my several decade career in industry and in engineering, is that the ability to make connections with people who are already doing or specializing in what it is you want to accomplish, or who know someone who is and have the technique and that sort of thing, can make all the difference, rapidly accelerating your progress and your ability to achieve results and be effective. I have one personal question for you at the end, but before we get to that, could you tell folks who want to find out more about Elemental Royalties, specifically, where does it trade? What's the ticker symbol? And then where should they go to get more information?
Well, we trade in, our primary listing is in Canada on the TSX-V with the ticker symbol ELE, and also on the OTC markets in the US with the ticker symbol ELEMF. And I think the best place to get information is if you go to our website, there's interviews and the presentations where you can get some more information. But we do always say, please reach out to us directly. It's sometimes shareholders or investors call us and they almost feel guilty about calling us. And, I don't want to take up your time, but from our side, it's actually really enjoyable to get people who we live our lives in the company 24/7. It's really nice sometimes to get investors coming and asking us questions and wanting to know more. So always reach out to us directly. Contact details are on the website if you would like to know more.
And I'll definitely put the link to the website and everything you just described there in the notes of this video, in the description. People, you can look there and find that. We've been speaking with Frederick Bell. He's the CEO and director of Elemental Royalties. And now I have a personal question for you. I'm sure it's one you've answered before. It's certainly one you know the answer to. I don't. And that is, how does someone as young as yourself what was your path that was really instrumental in breaking into this industry and becoming as positioned as centrally as you are to a young and growing company at this time? How do you become a treasure hunter and the CEO of a gold royalty company at such a tender age?
I think the two biggest aspects I would always point to are perseverance and hard work. It sounds relatively simple, but it has been an awful lot of work from our first royalty that was a $2 million acquisition, and we syndicated it with a private equity fund 50-50 to 3.5 years later, we just did a $55 million acquisition that we're doing now. So it's an awfully long way to have come from a startup. And I think it is down really to hard work, perseverance. You've really got to want it because it is long hours. And I think the last point, and the one we touched on, is surrounding yourself with good people, because that opens doors, and it's about the network and the connections in the industry as much as it is the work you put in. And if you can blend all of those things, then I think it puts you in a really good position to be, in the words of Rick Rule, as lucky as possible. And that's what you need in this industry.
Very good. We've been speaking with Frederick Bell, the CEO and director of Elemental Royalties. Frederick, thank you for joining us this first time on Liberty and Finance.
Thank you, Dan, again. It was very enjoyable.